Canadian retailers are grappling with a surge in insolvencies, signaling a deepening crisis in the retail industry. Since the COVID-19 pandemic, hundreds of retailers have faced financial distress, driven by a sluggish economic recovery and shifting consumer demand. Now, with global tariffs adding further pressure, many businesses are struggling to stay afloat. Federal data shows retail insolvencies and bankruptcies climbing over the past 4 years. We sat down with Michael Basso, partner at BDO Canada, to discuss what challenges Canadian retailers are facing and how they're adapting to ongoing economic pressures.
The pandemic changed us all, and what issues there were with the retail space pre-pandemic continued and were only made worse with the pandemic. And so, the most prominent in my mind being just the shift in consumer spending and consumer behavior, the which is effectively the rise of the online shopping, which we all got used to during the pandemic, and it continues to get refined as we see, week to week, month to month. Um, you know, Myself, even, I think, if I buy something on Amazon, I can now return it without even putting it in a box, using a QR code at the gas station. So, the convenience factor is going up, and, some now see going to the store as a chore. And so foot traffic is down. And as retailers, especially bigger retailers like the Bay, continue to exit the market, it's snowballing or spiraling downward further. And so I think again that consumer behavior is number one. The other thing we're seeing is just lack of a robust economy. There are signs of stress, slowdown of the construction sector, the trade war with the U.S., that people are being more careful with their dollars, and that translates into lower spending, especially on luxury goods. Now, some retailers are immune to this, where people might otherwise have gone to dinner. They're now eating in more. And so, the grocery segment is still strong. The outdoor segment, I think, is still strong. Canadian Tire's revenues are up year over year. But fashion, in particular, is still taking a beating.
We also discussed the impact of tariffs on retailers already struggling with debt and shifting consumer demand and how they can mitigate these effects.
It all depends on who you buy from. So, if you're buying from the U.S., there could be, that new cost, if we're taxing them or tariffing their goods the way that uh, us in a low margin business, and retail has moved to a lot of times a lower margin business, that this comes right off the top and could be hard to pass on. And the consumer, again, on staples, they might have to take the price change, but in the long run, it can be difficult as well. Tariffs are, say a Q1 and the Q2 sort of thing now. Maybe we haven't fully felt the brunt of them, as inventories that were bought pre-tariff work their way down. It's kind of the next cycle of goods where I think we'll see more price pressures moving them up. What can we do? And it'd be great to look for Canadian suppliers for goods. Promoting a retailer promoting that it's Canadian is awesome, and hopefully it drives some of that national pride to pick one retailer, a Canadian retailer, over a foreign counterpart.
We touched on some key strategies that retailers are employing during restructurings to navigate the rapidly changing market.
Ideally, they're looking to sell the business as a whole, as opposed to liquidate the inventory. You saw this on the Bay, if you've been following it, that they tried to carve out like a 10-store plan, from what I recall, to try and maintain that business. But ultimately, the challenge with retailers is that there's value in the inventory, and if over the long run they can't, if they don't have a profitable business, even with a cleaner balance sheet, that people don't want to buy that, where then the value of the inventory is higher than the value of the business going forward. And so that's a challenge for retailers, is to be profitable enough to have a core business to sell. And I think engaging someone like me early can certainly be helpful, because to put it in understandable terms, if the business isn't as sick, it's easier to help cure. some businesses are so sick that, liquidation is the only answer. Some businesses are so sick that, there is no path forward for them, because there is no business. But the sooner we get in, to assess that and help to see, how we can turn around the business, the more options we have.
Finally, Michael touched on revenue and cost as further factors in this grossing issue.
Retailers are getting pinched from both sides. Both the revenue is cycling downwards, and costs are going up or are very high. And again, on the revenue side, it's the traffic, consumer spending, and sourcing goods out of Asia that are often priced in U.S. dollars. And so we've had a bit of a recovery on the Canadian dollar of late. But when we're in a 65-cent dollar where we were, buying goods out of, in US dollars is not helpful. It decreases the margins, and you're unable to pass that on. And so on the cost side, for retailers, it's the bricks and mortar, which makes them less competitive to the online retailers. And then, with the bricks and mortars, retail, real estate was going up in value for so long that a lot of landlords have a high, cost debt structure and have less flexibility to pass on, to provide price savings on rent to retailers, which is what a lot of them are looking for with relief. And so, someone's lease might come up and they'll move to a cheaper location. Hopefully, landlords start to get more proactive and negotiate lower rents with their tenants to keep kind of that foot traffic, at those locations, and look, to the long run to get it back and help their tenants survive. But rent is usually the number one cost for a retailer. Seconded by labor. And I read recently about the death of the summer job. They're calling it, just that the labor force is changing as well, and people don't necessarily want the kind of retail jobs anymore, and can drive up the price. So yeah, between the costs being high and the revenues coming down, it's kind of a perfect storm to stress the retail industry, and you're gonna, I think, continue to see additional folks or companies exit the market.